Good morning. Is this on? Sounds like it. Good. What an honor. Thank you, sir. Thank you, Your Honor, Your Royal Highness. I'm an American. I tend to get these things wrong. I apologize. Could I invite my panel to come up, please, and join me up here? Panel. There we go. Thank you for this opportunity to host a panel. I think it's going to be a really interesting one. Is the microphone on? No? Is that better? There we go. Thank you. It's an interesting panel. We've been talking about various aspects of responsible investing and Islamic finance and where they share overlap, and how companies should report information in a variety of topics to create value, to create action, to build on what was just said. Engagement is important. How do we work with companies to change them, to help them see the value in the sort of ideas that we're talking about? And this is what our panel is going to talk about. I'm Kurt Lieberman. I run a small asset management company. I'm moderating the panel. I'm very honored to do that. What I'd like to do is have my panelists introduce themselves, make some brief opening comments. The one request I have is, Darrel, if you could go last, and I'll explain why after we do the introductions. So, Muhd, if you would, please. Introduce yourself and make an opening comment, please.
Assalamu alaikum wa rahmatullahi wa barakatuh, and very good morning to ladies and gentlemen. I must say I start this today session with a very good inspiration from His Excellency's keynote address, and this is a wonderful opportunity for me. My name is Muhammad Ramadhan Fitri. I'm heading Shariah Advisory Division of Maybank Islamic, and one of things under my portfolio is managing zakat and waqaf, especially to reach the less bankable or underbankable segment of consumers that maybe they have huge problems if they want to gauge or they want to receive financing facility based on the normal credit screening. And we believe that this is very strong instrument to reach the less bankable and underbankable consumers. Maybe just to start my session with a statement that I foresee that the future trend of Islamic finance is the Islamic banks, particularly in Malaysia, is moving from a pure credit intermediary to investment intermediary. So when I say the switch from the credit intermediary to investment intermediary, of course for a few reasons. And one of the key driver behind this transformation is the introduction of Islamic Financial Services Act 2013, where the legal framework pushed the Islamic banks to clearly define or redefine our deposit product into two. So you have Islamic deposit where the placement made by depositors is guaranteed by the bank. And the second category of deposit is what we call investment account. So investment account is a very interesting proposition as far as Maybank Islamic is concerned, because this opened up a very interesting opportunity for us to engage into a new segment of business. And I believe that ESG, or when we talk about responsible finance, this is a very good instrument to instill ESG or responsible finance philosophy in our investment account product. Because in investment account, there are mainly three main stakeholders. The first one is investors, second, the bank, or they call it as a sponsoring bank, and the third one is the entrepreneur who looking at the financing. So not only the bank need to increase or to enhance the standard of disclosure, because now you are not talking about solicit your deposit for financing as per the normal credit intermediary position, but now you are actually soliciting funds from the investors, and they are not a normal depositors. So the bank need to increase or enhance the level of disclosure. Entrepreneurs need to ensure that the standard of transparency as well as the standard of governance in order for them to able to solicit fund through this investment account. And of course, investors need to make a well-informed decision for you to invest, because this is not a pure deposit, but this is investment. And of course, this investment is not guaranteed by the bank. So we see that this is a very interesting proposition, and we believe that maybe I will talk later about this game changer in maybe a next round, where ESG or responsible finance can play a huge role in this IA arrangement. Thanks.
Well, thank you. Tahir, please.
Thank you very much. I am Tahir Sheikh from CIMB Islamic. And CIMB Islamic is one of the larger universal banks out of Southeast Asia. We have around 40,000 branches and around 1.3 million customers. I'm part of CIMB Islamic team, which is the Islamic franchise of the CIMB Bank. And a bit of my background, well, I started my career as a design engineer, so I'm an engineer by training. Moved to a bit of project management, and then had a degree in development, international development from Kennedy School. And after that, I've worked in the Islamic Development Bank and then moved to the private sector, being based in Dubai, in Bahrain, and now here in Malaysia. So over the years, I've actually been a senior lender, been a mezzanine financier, an asset management financier these days, an asset manager these days. I've made private equity investments, and all this has been in an Islamic field and development oriented. And why I highlight this background is because when we talk about responsible finance, I think it is important when we talk about these overarching, encompassing terms to be a little more precise and clear so that we can attune what scope we can assign and what kind of discussion then can consequently take place. I'm very thankful to His Royal Highness about his comments, which essentially span the entire and interlink the entire challenge of development vis-a-vis finance. But I think as a finance practitioner, it is very important to understand what is commonly known in the larger world as finance, and both in academia, and we need to revisit that definition. So I would start that when we talk about finance, when you Google the term, you would find that, well, it's a field that is related to investments. Here you are talking about risks and consequent rewards. So there is no mention in that definition of finance of any ethical connotations and any morality associated with it. So that's, I think, the point number one we need to keep in mind when we talk about how stakeholders interact. And this is also in the academia. If you do a PhD or a master's in finance, your core course is in asset pricing. The books like of Cochrane would tell you essentially very elaborate mathematics dealing with the pricing of the assets, all quantitative criteria, your capital asset pricing models, etc. There is no variable in there which essentially deals with the social or the development, quote unquote, parts or the moral values in there. And same goes with the economic theory. If people who are here and most of the central bankers come from the background of PhD in economics, you would know we would all go from the Warlesian theories and utility maximization framework, and then you would go to general equilibrium and whatnot. So that is the context that needs to be kept in mind. His Excellency rightly said that, well, finance, responsible finance cannot happen in an irresponsible macroeconomic or general environment. Very true, but the question is, I think it's important to define and kind of ring fence the scope of what finance professionals can do, and that is why I highlight this. That's point number one. The second point I would like to put on the table is that, well, at the end of the day, it is, while it cannot take place outside the context of the overall macro environment, in the end, the industry itself, we are a service industry, right? It's a function of supply and demand. It's very easy to talk about, and as again, His Excellency said, that we are all already converted here, to talk about all these lofty ideals, but it is very difficult to convince even very sophisticated investors that are you willing to give, for example, compromise on 2 bips of return vis-a-vis another product because, well, I adhere to very high ideals of the ethical and responsible investing. So my experience, and that's the real life experience for what I've observed in my 17, 18 years, is that it is very, very tough. So that's the second point to put on the table. And then there is another point that, well, if you look at investments in general, right? So there is and I think one of our colleagues here would talk about palm oil, so I think it's a very relevant example. We Malaysians and Singaporeans who here are very familiar that there comes a month or a month and a half here in Malaysia where there is a lot of haze and you can't see just a few meters across. And that is because a large part of plantations, rather than being cut, are burned. Now, the question arises is, at what level is that an issue? Is that the failure of, and usually you hear the tussle in the newspapers, that, well, most of these plantations are in Indonesia, the government is not doing anything about it, Indonesian government. The answer you get is, well, most of the owners of these plantations are Malaysians, well, what are you complaining about, right? Yeah. But then, again, if I take one of these firms, and if I am a portfolio manager sitting in New York or in California, and I'm designing an emerging markets portfolio, am I looking at and I understand there was a discussion here yesterday on hot money versus long-term perspective. Am I really looking at the returns? It would be very nice if the markets were efficient and a good company which is cutting its trees at a higher cost, this share price would be reflective of that, and it is internalized, but it is not. So if I am a portfolio manager sitting in Pacific Life, probably managing a pension fund, I would rather look at the returns and the characteristics of the key big companies if I am exposed to this plantation sector, right? Look at the return profile and include it, right? And then I will basically go and start surfing way back in Pacific myself, right? So how much am I concerned, right? So it's the whole edifice of this system is. So the question probably is, and this is where I'll pause my comments for further discussion, is that, well, when we talk about finance and responsible finance, where do we ring fence the scope? Is it an appropriate discussion to include everything under the sun and as a larger development objective while talking about finance particularly? Because while we should talk about development, but we should talk about larger macro objectives, but is that, when you're talking about really responsible finance, do you want to expand the horizon and ambit to such a wide scale?
Okay, thank you. Benjamin, please.
Thanks very much. So I think I'll follow by giving a little bit about my background and where I interacted with these issues. I started my career as a mainstream fund manager, buying and selling shares listed on the London Stock Exchange. And if you're wondering, that at that point in my career, the questions of responsible finance and is this consistent with environmental, social objectives, is this doing good with money, they simply at that time, those questions weren't in my mind. I had a career break, traveled extensively, and then came back to the UK somewhat later and thought, okay, the industrial economy carries with it some problems. From an environmental perspective, it's unsustainable, and the benefits of economic development and prosperity are not being shared equally through society. So what will I do about that? I realized that I had this language, this investment language, and I also understood that a lot of the civil society organizations, the social sector, didn't understand finance. And when they tried to engage with finance, they often would frankly fall short and they'd lose credibility, not because they don't have great things to say, but they just didn't know the right language to express it. And so I've had a variety of different roles over the last 10 years now, actually, helping understand the financial relevance of sustainability and governance issues. And in fact, that's what I now do. I've been based in Singapore a bit more than 5 years, and my consultancy, Asia Research and Engagement, helps investors and banks, companies, and civil society organizations understand the financial relevance of sustainability and governance. In fact, a piece that we've just published, and one of the reasons that I've been in Malaysia this week, is a piece on palm oil with an investment bank, trying to understand why, if you're a mainstream fund manager, if you, forgive me, don't care about ethics at all, why should you still care about sustainability in the sector? I don't want to steal any thunder, but it's true that one of the companies that was an RSPO member has been suspended quite recently, and the share price has fallen significantly. So we do actually have a data point from this month on that particular. I want to share a little bit about why, from a values perspective, this is helpful. There's 3 techniques that investors have in terms of ESG when they're adopting responsible finance: screening, engagement, integration. And here I'm talking about investment in public equities and publicly listed debt, which is where I'm most familiar. Bank finance is a little different, but one could apply similar terms to the practices which are adopted. So screening, typically negative screening, we don't want these industries. There's also positive screening, we do want these industries. We do want renewables, we do want clean tech, we do want schools and hospitals. But typically, negative screening, unless it's done in a very large way, won't affect the cost of capital. But where an organization publicly states that it won't invest in a certain industry because they think that the sustainability characteristics are poor for that industry, that public signal allows regulators to take a bit more action than they might otherwise have done. So the use of negative screening from a policy context is that signal. And in fact, engagement and integration, ultimately, it's a similar mechanism by which finance signals to companies and to regulators issues that, from a sustainability perspective, need to be taken more seriously. So with engagement, a lot of the large investors, if they own companies, they will speak to those companies about issues, about corporate governance standards, and about such issues as human capital management or track record with regards to environmental waste and emissions, to make sure that that company is performing better. Very often, the studies show that that's going to improve the business performance of the company as well. And finally, this point about integration. If you're a financial analyst analyzing let's say, the oil sector, and you find that the health and safety record of a company is quite poor, that's actually a negative signal in terms of investment. I go back, I know this is a slightly old example, but it's just one that's so good. I mean, BP, you know, actually the organization that I was working with, I mean, this is back in 2009-10, we did look at the health and safety track record of BP, and we were running an underweight position on the stock because of that. And indeed, we were rewarded for it. So I guess just to sum up my key opening points, even as a mainstream fund manager, it's worth looking at sustainability and ESG because it will help you perform better financially. And it's good that fund managers should do that because when they do, the issues will be taken more seriously and sustainability will be better managed. So thank you.
Thank you. The reason why I asked Darrel to go last is, in addition to doing the introduction, he did a TED Talk on his palm oil experience and the people in the industry that have come together. And so if, in addition to the introduction, you could say a couple things about from the TED Talk. For those of you that have not seen it, I've asked that the summit tweet out the link so you can watch the video at a later time.
Thanks, Kurt. Well, that was probably one of the better speeches I gave in a TED Talk. So I'm going to disappoint you now because it's all downhill since then. My name is Darrel Weber. I think it says somewhere in the program that I lead an organization called the Roundtable on Sustainable Palm Oil. You know, confession time. I used to work in extractive industries, oil gas sector, timber industry, etc., etc. And like my colleague here, I went into work with the civil society because they didn't understand how to talk business, and I did at the time. And you would have thought that business would readily accept someone who can speak their language, but till today I still find difficulty talking to business. You know, a lot of the times it's about cultural mindsets, etc., etc., etc. And also to do with the context in which we live in, which is the short-termism world that we live in, the quarter-to-quarter reporting, the annual reports, which, as His Royal Highness so rightly said, it's numbers devoid of humanity. Sometimes you take out the numbers from human beings, and that is really the issue today. So I'm going to try and so that's my introduction. I'm going to try to cover a little bit of my TED Talks. It's not going to be as great, but I'll try. So the first thing I always ask an audience, and I do this around the world, and it always surprises me. I ask the audience, who here has had palm oil today? Can you raise your hand? Who has had palm oil today? From the time you woke up to about 10 a.m., who here has had palm oil? Raise your hands, please. Right. So, good. You're enlightened few. But the rest, I don't blame you for not knowing whether you've had palm oil today. All of you have had a version of palm oil today, simply by waking up and going to the bathroom and brushing your teeth. Toothpaste that you put on your toothbrush has a version of palm oil. It's a derivative of palm oil. The bread that you eat in the morning has vegetable oil, which usually means palm oil. The margarine that you put on, the spread that you put on your bread usually would have palm oil, unless you eat pure butter or some version of lard or something like that. So it's everywhere. It's a ubiquitous commodity. It's in most of the foodstuff that you get. You can find in a supermarket. Now let me tell you about the genesis of the organization I run, which is the Roundtable on Sustainable Palm Oil. It was created on the back, well, the genesis, the idea came in the year 1997 to 1998, which is the year where people coined it as the year the world was on fire, the year the planet was on fire. It was the first big haze. It was a mega haze because not only the traditional haze that we get to know, the Indonesian burning season starts, but also the northern bits of Southeast Asia, Cambodia, and everywhere else, Vietnam and all, were on fire at the same time, and North Australia. So the whole region was blanketed in the haze. Now people wondering, why is this haze so bad? What's causing this haze? So some civil society guys wrote a report, and to the horror of many, many people, they linked the palm oil plantation industry, they linked the consumer goods manufacturers, they linked the financiers, they linked the retailers to the haze, because the fastest way to open a piece of land was through burning. And once you start applying for a piece of land in Indonesia or in many countries, you are given a time frame in which you have to clear the land and develop, otherwise the concession gets pulled away. Now, the people in Sumatra, and I want to go back to a point that I regularly hear in the radio and media, that the haze is a natural occurrence. That is, I would say, almost blasphemy, because God did not create the haze. Human beings created the haze. 10, 20 years ago, 30 years ago, there was no haze. There was no peat fires in Sumatra. The fires in Sumatra were definitely caused by human beings. Definitely caused by expansion of the plantation sector. Definitely caused by large plantation companies in the past. Today, no. It's not by large plantation companies, but I'll come back to that later. So, and to be honest, many of them didn't know any better. Not many people know that the plantation industry, the big plantation industries in Malaysia, started off also with fire. But they didn't burn on peat. But the practices of fire, open burning in Malaysia were then exported to Sumatra when the large players went over to Sumatra, and they thought they could still do the same. But when you start burning peat, it's a horror story that doesn't stop. It comes back and bites you again and again every year. So I call it the predictable annual disaster. So on the back of that disaster, many people, and on the back of that report that came out that linked everybody along the supply chain to the haze, an organization like ours was founded. They wanted to find, well, how can we separate the good guys from the not so good guys? How can we promote better practices? Because there were already plantation companies who were practicing a zero burning policy. Now, how can we do this? How can we promote the good and weed out the bad? So the RSPO was formed. It was formally formed in 2004. Now, forming was great. We can bring all the relevant stakeholders along the supply chain together. We brought in the growers, the traders, the consumer goods manufacturers, the retailers, the bankers who finance everything, the environmental NGOs, the social NGOs, all were invited to the party. And today, we're quite a substantial platform. But coming in to join something is the first step. But what are they signing up for? Nobody knew what the definition of sustainable palm oil was. So then came the creation of a standard. Now the standard was created not like a traditional standard could have been created. They brought all these stakeholders from opposite ends of the issue, environmental NGOs and growers, put them in a room and thrashed it out for a year and a half. And the conversation stroke argument lasted for all that time. But then it came to me. I was one of those 20 people who designed the standards. It occurred to me that in reality, people don't know what they don't know. The businessman didn't know that if you light a fire, you would definitely kill 200 orangutans, for example. The NGOs didn't know that if you don't light the fire, you won't get your business permit in time. The financiers didn't know that despite the fact that plantation companies having a legal permit to operate were pretty soon losing the social license to operate in that landscape. And it's easy to understand why you can lose your social license. And in Sumatra, your social license for palm is quickly eroding. It's quickly going. Because if you can imagine a young child in a smoke-filled environment for 2 months, 3 months, you will see that child coughing chronically, you will see that child, blocked nose, blocked air passages chronically for 3 months. And it just doesn't last for 3 months. It goes on for years because the effects of those bad stuff continues for years. And some of those particles gets lodged so far in the lungs that it never comes out. So the social license is going to erode, therefore it will impact business, and they created a standard. Despite the arguments in the room, 1.5 years later, a standard was created. Today, I'm glad to say that about 20%, more than 20% of global palm oil is certified as sustainable according to that standard created in 2005. We have 2,600 members around the world, probably 80 countries, and they represent some of the largest companies in the world, the Fortune 500s, but also includes smallholders, includes community-based organizations, etc., etc. So we've got a very wide organization. I just want to say that I've heard it before. I've heard it all before from all stakeholders saying, this is really not my job. I can't really control the behavior of someone on the ground when we started this. Today, all stakeholders know that they have a role to play to make things better on the ground, despite how far removed you are from the supply chain. All stakeholders have a role. Thank you very much.
Thank you, Darrel. It's interesting. We have 4 very different perspectives, and I think it's going to be great for us to engage in the topic. What I'd like to do is to begin to engage all of you in the topic, and if the people running the conference could put up the question. And it's time to bring up your app on your phone. So the session question is, who should be responsible for setting minimum standards of sustainability? And you have 5 choices ranging from financial institutions to non-financial institutions to governments and regulators to NGOs, or some sort of combination. So if you could go ahead and vote, we'll bring it up in just a second. Tahir, if I could come back to you. Benjamin and Darrel were both talking about how this can affect the actual operations and financial results of a business. How, as you're looking at a company, do you include these factors? Because if I could have you play a role as the more pure, I'm going to just optimize my returns. I want the best possible return for my shareholders. How do you incorporate factors like that if you're going to come at it from this sort of perspective?
Now this is a very interesting question, because in the end, it is determined by what your clients or ultimate clients want, because it is a service industry. So if you are a private equity fund manager, and if your investors care about these issues and want to essentially give you money only if you want to adhere to certain standards, be it Equator Principles, be it IFC guidelines, whatnot, be it Asian Development Bank guidelines, and there are a whole slew of standards that is available, but fairly by and large common in that context. So if they care, well, you will only be able to raise that money as a PE fund investor, etc., if you get that. The consequence of that is becomes on the other side, right? So if now you go and start private equity investing, or whether you are senior lending or providing a mezzanine debt, right? The people who are going to use your funding essentially are in a very competitive landscape. So while the intent is good, and you are able to, and we have been, I personally have been able to influence that and add these guidelines and nudge them towards benchmarks and establish baseline studies, which we can monitor over the period of investment and have a change. But then there is a fundamental question that needs to be asked. This doesn't come without a cost. For example, if you look at IFC lending, right? Well, there are huge advantages. It's longer tenor lending. They go and impose all these ESG and governance standards, socially responsible investing. But their lending is not cheap. So if you go to the market, the people go to IFC as the last resort. And IFC says, well, we are very proud of it because our idea is not to outcrowd the existing commercial system. But the fundamental question that needs to be asked is that, for example, on a $1 billion project, is it that you are paying another 2 percentage points through a lender and enforcing all this mechanisms in there, or would that 2 percentage points be better spent in an overall macro system by the government and address those issues in the first place, right? So this is where the trade-off lies. You do impose, but in the end, somebody somewhere is bearing an extraordinary cost of it lopsidedly. It's not even playing field. So the question, and it boils down to the crux of it, is that this needs to be done. The socially responsible investing has its place, but it has to take place, and I would reiterate, very key fundamental point, that it cannot take place outside an irresponsible, in an irresponsible economy.
Maybe just to add
Sure,
on point mentioned by Tahir. I think for Islamic Bank, maybe I come from that perspective. To embrace ESG is not a new thing or outright alien to Islamic finance, because the fundamental of Islamic finance and the tenets of responsible finance to a large extent is compatible. In fact, I can say that the philosophy of Islamic finance is even to a certain extent more comprehensive than responsible finance. But the problem is, on the one side, this is the philosophy, and the second side, this is the practice or the current practice of Islamic finance. And I think this is the challenge that it is quite a timely challenge for Islamic finance to really embrace the philosophy of Islamic finance, which is compatible. And I can see a clear convergence between these two concepts, the Islamic finance as well as the responsible financing. And I think when it comes to the performance of the company, I truly echo what have been mentioned in the keynote address yesterday, that there are clear empirical evidence where ESG can lower down the cost of capital, for example. The ESG can help the institution, including Islamic financial institution, to enhance the operational excellence of that financial institution. And for a bank, our valuation is not just the profit before tax for Islamic finance or Islamic bank, but we look at how we can minimize our operational costs, for example, how we can better manage the capital of the bank. And I believe that ESG is a very strong instrument. First thing, it is compatible with the spirit of Islamic finance. And second, it can help to achieve a more comprehensive scorecard for Islamic Bank.
Very well said. Benjamin, if I could play off on a couple of these points. In the palm oil example, there was a very clear need, and there was a lot of leadership by Darrel and probably some people that worked with you in that, but clearly your personal leadership was incredibly important. Not all issues have that clarity and that leadership. And how do you get engagement started in those sorts of situations?
That's a great question, and it's a challenge. So I think that perhaps I'd like to, the term that the international investment community uses for responsible finance would be ESG. That's an acronym rather than a term. So environmental, social, and governance. And usually I don't like to use an acronym because then you don't, it sort of gathers unrelated concepts together. But if we can break down that for a moment, when you look at G in the context of listed companies, very often the standards that you need are relatively well defined, and they apply across the whole market and across various different industry sectors. You know, if a management team is going to have related party transactions with their own family, so they grow profits, but as an investor you don't enjoy the profits because the profit goes somewhere else, that's a bad thing. So G, the knowledge goes across the entire market, and I'd say that mainstream finance has been looking at G a little bit longer. It certainly hasn't got it all right, as the global financial crisis showed, but there is some common understandings across the market. Sustainability is much tougher. The standards that you need to, or the knowledge base that you need to come up with standards in different industries are different. In palm oil, it's one particular industry, and you need to have representatives from the whole ecosystem to understand a common way forward. And RSPO, in many ways, has been globally leading in that, actually, and other systems are following it and learning lessons, in fact, from the experience. So the Roundtable on Responsible Soy, for example. But then, even if you look at something like forestry in Canada, where it's just completely different. Trees here grow really quickly. Trees in Canada grow really slowly. So the standards that you need to adopt are different, and that's in a really closely aligned industry. What happens when you move into, banking, for example? In banking, human capital management is the material issue. Talent constraints. In mining, health and safety, I already mentioned the BP example. So the solution, having said that there's a problem, which is that on the sustainability side, you need different bits of expertise, the solution is to gather the right bits of expertise together into the room and have that conversation. And it will be different players in different industries. Sometimes you're able to get everybody together. Sometimes we're still waiting for everybody to come together. And that's just sort of a fact of life.
Okay, thank you. Are the results ready? Can you show the voting results? So the most common answer is multi-stakeholder groups. Hopefully the way that I set the question up didn't bias you on the answer. I've got a point of view. I'm trying to keep it separate because I'm the moderator. But I was kind of guessing that was the answer. So Darrel, if I could come back to you. What advice do you give someone? So let's say I'm calling you from some other, in Benjamin's example, from some other industry, and I'm starting at square one. I'm starting at the beginning, and I want to create something like what you created. What would you tell me to do?
I get asked that a lot, actually. So Benjamin kindly mentioned that the RSPO is sort of a leader in the pack on these things, and yeah, I'm humbled that a lot of people think so. It had a very tough beginning, and I currently advise several roundtables. So the good news is there's all sorts of roundtables. So there's something called a Better Cotton Initiative, a roundtable on responsible soy. There's stuff on beef. There's sugar, all sorts of things. Some doing better than others. So I've had the opportunity more or less to understand what makes or breaks some of these roundtables. And my first impression is, the most important thing is you must have visionary people in the team, in the core team. If you bring bureaucrats who are told to go there, they will sink it. They will give you 200, 300 reasons why this cannot work. They will give you a few hundred more reasons why it's not your responsibility. 1,000 reasons to say it's the government's job. In actual fact, the leadership, the individuals within the organization, I don't care how big the organization is that comes on board these roundtables. It's that individual. The quality of that individual is important. If that individual has the audacity to go beyond the norm, and if there's enough of a collection of them, things will work. Nobody knew. Let me tell you, the first chief executive, or at the time, Secretary General of the RSPO, a good friend of mine, he said the maximum we should be able, we could get, and we should be very happy with, was 50 members. We now have 2,500 members. And my big issue today is because some guy, I met a representative of one of the biggest retail conglomerates in the world, and he told me, Darrel, if all of our suppliers become your members, that alone would be 20,000+ members you would have from us.
Wow.
So then he said, you really got to rethink your model. I mean, I can't have 20,000 members. I don't want 20,000 members. So, but the reality is, individuals made the organization where it is, number one. Number two is, I think you need to find the time and need to suspend disbelief. It's a good practice to have. Hold your tongue, suspend your disbelief, and find reasons and practice to ask yourselves, well, what could make things happen? Paul Polman of Unilever, classic example, chief executive of Unilever, says, I want to grow by, I can't remember, 50% by a certain date, but then I want to reduce my impact on the environment also by 50% at the same time from today's impact. He doesn't know how to, he can do it, but I know Unilever well enough. They're working damn hard on it. So that's a visionary. And we have many, many like that. Unfortunately, sometimes visionaries do not have enough time to stay in their jobs to reap the rewards. So initially they will be blamed and tortured by their own team members. And then sometimes they call me in the middle of the night saying, I'm so tired of this. But the fruits of it is phenomenal. Today, 9 countries in Europe say they will only buy certified sustainable palm oil by a certain date, by 2017, by 2020. In some markets in Europe, it's the norm. Sustainable palm oil is the norm. It's no longer niche. Today, jurisdictions, there's a jurisdiction in Malaysia, Sabah, who says they will only produce certified sustainable palm oil by a certain date. We are talking to 1 or 2 African countries who also want to say the same. We are talking to countries in Latin America who also want to say the same. 160,000 smallholders have gotten certified. So I always tell the big guys, if 160,000 smallholders can get certified, what's your excuse not to get certified? If a small cooperative bank can join the RSPO and put in guidelines that mimic the RSPO guidelines, what's your excuse, Mr. Big Banker? So I go to Singapore often because every time there's a haze, the Singapore government knocks on our door, rings me. And I said, well, stop financing the haze. Simple, right? You keep financing it, and then somebody in Singapore pays for the cost. Yep. So these are, I would say, to start with, leadership. Second is, I think, a multi-stakeholder way. I mean, real multi-stakeholder, not ticking the box. Not saying that I will invite this NGO, and that NGO mainly because they would agree with me. That's absolutely the wrong way to do it. So, yeah, 2 things.
It sounds like, if I could submit a third, it sounds like you also work to create empathy across the stakeholders. So you help them understand how the other players saw the world to make them more open to collaborating with each other. Is that fair?
Well, we sought to, empathy is one way to say it. I think it was trust. So you really had to, what's the word? Put all of these guys in a room and over a very hot fire, right? And then they understand that, okay, now I see his point, right? Yes. If I throw a match, I'm going to incur, I don't know, X number of orangutans dying, and also a few thousand children not being able to breathe properly for 3-4 months of the year, and also cause X number of children having asthma attacks regularly. So they understand. My biggest excitement is when the CEOs of plantation companies show me pictures of wildlife on their mobile phone.
Oh, that's neat.
In the past, they never considered this. I know CEOs of large plantation companies who put in video cameras in their properties just to see what wildlife crosses.
Wow.
That's what. I also know that the CEOs in the past, let me tell you, when a CEO or a board of directors sees a concession, the first thing they do is think about how many bulldozers can I send there, and where can I find the drivers to run the bulldozers. That's the first 2 things. This is standard. Yeah? Now they're thinking about, okay, where can I find a biologist? Where can I find a primatologist? Where can I find a sociologist, anthropologist? To understand what are the issues on the ground before I even think about bulldozers. So those are the big wins that we
great.
see. Yeah.
That's wonderful. Now, clearly, multi-stakeholder groups can be very powerful. Let's, if I can, switch to the government side of it. And Muhd, maybe that's an interesting perspective. How do you see government being helpful or conducive to the sort of things that you're doing on inclusive finance? If you would, please.
Yeah, I think I have a strong belief that the government also play a very important role here, because when it comes to even Islamic finance, the context of Islamic finance today, I believe that there is a level of awareness in terms of the importance of ESG, for example, to be embedded in the practice of Islamic finance. But I see a clear mismatch between the level of awareness and level of literacy. I think in terms of awareness, there is awareness, strong belief that there is a convergence between the philosophy or fundamentals of Islamic finance and responsible finance. But when it comes to literacy, I think this is not unique to Islamic finance or maybe leaders in Malaysia per se. Even I saw the reports or the studies. In fact, when we survey about 300 CEOs, when we talk about responsible finance, we can get more than 100 versions of responsible finance. So because of that, I say that there is a mismatch between the level of awareness and level of literacy. But I truly believe that the government have very important role to drive this agenda, because at the end game or the end product of ESG, we want a sustainability of the market space, as well as the larger impact to the society at large.
Okay, thank you. Benjamin, do you do much work with governments, and how do you engage with them on these sorts of topics?
So I'd like to share one example from Singapore, actually, which I think is very relevant and pertinent. And then actually I might even, if I'm allowed, ask a question
Please.
Of the financial institutions. So I did a piece of, well, I should say we, ARE, did a piece of work, in fact, with WWF last year. That's the World Wildlife Fund, not the World Wrestling Federation. The Worldwide Fund for Nature. And it looked at sustainable finance in Singapore, Indonesia, and Malaysia. It was a public report published in around May. It's WWF, so the central concern is forests and plantation companies. But this time we were looking specifically at the financing practices and where ESG was being embedded. So one of the things that I did was I looked at 18 banks across the 3 countries, and what do they actually say about responsible finance, responsible lending, and ESG? Well, unfortunately, I have to say that the answer was not all that much, but we kind of know that. One thing that I would say, though, is that for the majority of banks, there is Islamic finance. So we did acknowledge that that's there. But then there's no sort of detail underlying that around what are the standards in relation to the plantation sector. And that this has a contrast to the international banks. So HSBC, Standard Chartered, ANZ, Westpac, all have detailed policies, frequently referencing the RSPO in terms of palm oil, referencing FSC, which is a forest standard, or PEFC in relation to timber and plantation. Interestingly, Indonesia was slightly ahead. BNI has a policy which references RSPO. That was already in place at the beginning of last year. So what happened, I mean, we were very careful. We were just surveying the landscape. We weren't picking anybody out. We just want to know what's out there in terms of finance, and naming and faming. So as a result of this, it helped particularly in Singapore. They realized, oh, we've got a gap here. And then they have people like Darrel saying, well, why are you financing it? So they have They realized the issue. Following that, and for finance, I think this probably is the right way. It was a voluntary response by the Association of Banks of Singapore. And the response was that the ABS put out guidelines on responsible finance that apply to all of its members. It's very much first steps. So it's just a couple of sides. It sort of effectively requires a CEO statement on what the banks are doing about that. But it is still a first step and quite solid. So Singapore is moving, arguably from a little behind. Indonesia, some of the banks have already moved. And here comes my question. So in the context of Malaysia, what might be the right way to encourage banks to start addressing that? ABS isn't, of course, a government institution. It's a voluntary sector institution, but it was done in coordination with MAS.
Let us step back. The problems arise because there is an externality. There are costs of doing things which are not being captured. And the result is that because of that, some entities, some people, some firms are showing or bearing a larger share of profit and somebody else is paying for it. And when you talk about the role of government at a very fundamental level, that is where the challenge of the regulators lies. That is where the job of the government lies. You can create industry groups, you can entice some investors, can go and motivate some people to essentially force some institutions to adhere to these principles and all. But essentially, if the playing field is lopsided, you won't be able to resolve that problem. And that is where the fundamental issue lies. And current challenge, essentially, it is of this nature. Also, we need to be very careful when we cite examples of very big multinationals and all, doing very, very good now. But that cynical part of me reminds me of a saying I read a long time ago. This was an advice of a father to his son. And he said, son, money doesn't buy happiness, but entertain these thoughts only when you have some decent money within your pocket, right? So when you really look at the history of this evolution of all these companies, if it's a 100-year-old company, I'm not, as my colleague here rightly said, it's not a question of pinpointing anybody. But it's only now that they have crossed that threshold, or even if you look at the West, it is when your GDP per capita has crossed $20,000, probably now you are thinking of responsible investing or not. For a person who is living under $2 a day, try convincing him to adhere to ESG guidelines and sustainable development, right? You'll have a hard time doing that. One associated remark, I think there was on the Islamic finances. I mean, that is my and our, both of us. It's our bread and butter. We are very passionate about it. But even if you look at the guidelines, whether it's Securities Commission guidelines here, whether if you look at FTSE, Dow Jones, whatnot, your area of listed equities, essentially screening based on businesses and then financial ratios. So, and we all drive our inspiration in Islamic finance from the principles of Shariah, and I see Professor Rifat also here. The Al-Ghazali in the 11th century said that the ultimate goal is essentially to actually, the objective of Sharia is to promote, and I quote, that to promote the well-being of the people in safeguarding their faith, their lives, their intellect, their posterity, and their wealth. But you see here screening methodologies, which practically, when you talk about Sharia compliance, fail to capture all this, right? So company, not because of it's doing anything on its own, just because certain financial parameters may match, and just because it is in a business which is not excluded, right, will become Sharia compliant, and a lot of funds and a lot of money would go in there, and one fine day it takes a big conventional loan, falls out, and then may fall it again.
are we really hitting the nail on its head? Are we really trying to achieve this? So coming back, if the crux of all this is, while all stakeholders are important, and this is what the poll showed, probably the fundamental role essentially comes in is entities, which is actually regulators and government, to eliminate the externalities. Industry associations on their own, people on their own, won't achieve it. They need to be nudged.
Thank you. Do I have time for questions from the audience or not? No? I apologize for that. It was a very entertaining, great discussion. Thank you, panel. Thank you, audience. Hopefully you found value in it.